Hello and welcome to the Beginner's Guide to Rubicon. In this guide, we'll be learning about the Rubicon protocol. We will start with a broad overview of how it works and how you can use it. Then there will be a hands-on tutorial showing you how to bridge to the Optimism network and get you set up to use Rubicon. In this series, there will also be a second video in which we'll get hands-on experience with using the Rubicon protocol to swap, trade, and pool assets. So, what is the Rubicon protocol? At its most basic level, it's an exchange. However, it's not just an ordinary exchange. It's a decentralized order book protocol. An order book protocol means it keeps a list of orders and it will match sell orders with buy orders to find the best price for both parties. This is different than a standard decentralized exchange, where most of them use a common mechanism of exchange known as an AMM. An AMM uses a predetermined formula to calculate the price of an asset at any given point based off the ratio of assets in a pool. Rubicon gives you better trade execution because of its order book, which is known to give better trade prices than AMMs. What does it mean to be decentralized? Well, Rubicon is built on the Optimism network, which is an Ethereum Layer 2 network. Because the Ethereum network is kept running by thousands of nodes distributed around the world, it is extremely difficult to censor or bring down. Unlike centralized exchanges or some partially decentralized exchanges such as DYDX or Zigzag, Rubicon will keep running as long as the underlying network is online. As a user, how can you benefit from using Rubicon? Well, you can trade your assets such as ETH, BTC, USDC, or OP. You can place limit orders to buy or sell a certain asset, and you can passively pool your assets to earn a yield. You can also become a strategist and earn rewards for putting other people's tokens to work. This is a more advanced strategy, and I won't be covering it in this beginner's guide, but in future videos, I will be covering how to become a strategist and interact with the Rubicon protocol through some code. So let's break down the decentralized order book protocol term a little bit more. So most other exchanges make it extremely difficult to market make. You need to be a large institution in order to participate. Rubicon's design allows anyone to participate in market making while still allowing people to participate passively or actively. This diagram from their docs does a great job of breaking down how people can participate in this market. On the left here we have traders. These are people who want to make trades. They want to trade USDC for Ethereum. They come to the Rubicon exchange and they place their trade. Their trade then uses the tokens that are in the Rubicon pools to swap between assets and give them a great execution price. Behind the scenes, the people that create these pools and put them to work are passive liquidity providers, which is anyone. This will be the most common way to use the Rubicon protocol as a liquidity provider, as it's the easiest and quickest to get started with. The second type of person who will use these Rubicon pools are the professional market makers. These people will provide large amounts of liquidity and can also use these pools and manage them and become a strategist with the money that are in the pools. The third type of person is a quant trader who is able to use the pools without providing their own large amounts of liquidity. All of these three participants will profit from helping traders execute their trades at a great price, and the traders will get a great price on their trades. So everyone benefits from this design. Rubicon gives people the option to passively participate in market making, as this anyone circle shows, or actively participate in it, as the professional market makers or quant traders would do. This is very beneficial because it gives you the benefit of AMMs, of being able to one or two click and deposit your money and make some yield on it. Or if you want to be a little more active and actively manage your funds, you can do that as well. Let's dive a little bit more into Optimism. So Optimism is a layer 2 network built on top of Ethereum. It inherits the security of Ethereum because it's a rollup and it submits transactions to the Ethereum Layer 1 to be secured. This is excellent because Ethereum Layer 1 is extremely secure. It's the most secure network in DeFi, and it currently secures over $50 billion in DeFi assets. The one downside of using the Ethereum Layer 1 though is the transactions can be quite expensive. The gas fees on Ethereum Layer 1 are quite high. On Optimism, this is not the case. They have quick and cheap transactions on Optimism, and they're usually around 30 cents for a token swap. Optimism is also EVM equivalent, which means that any tool or smart contract that works on the Ethereum Layer 1 can also work on the Optimism network, which is extremely important because the most robust and battle-tested code and tools is built for Ethereum. So Optimism is able to reuse those tools and inherit all the security and trust that they provide. It's also extremely easy to onboard onto Optimism. You can use the same wallets that you're used to, such as MetaMask, and it's as simple as 1 or 2 clicks to bridge over to Optimism. There are also centralized exchanges that support withdrawing money directly onto Optimism. So let's break down one more time just to get a feel for how you can use Rubicon. So you can place market or limit orders. And so market orders will execute immediately at the current market price, and it will try to give you the best price. Limit orders will wait until a certain price is hit to execute your trade. And you can buy or sell on a limit order or a market order. Next is swap. Swap is excellent. It gives you a very simple UI, just like Uniswap, and it routes your swap through the different pools to find you the best execution route that will give you the most for your trade. It's also very gas efficient, and it most of the time will give you a better trade execution than another AMM-based exchange. Thirdly, you can passively pool your assets single-sidedly, so you can deposit OP and just OP. You don't have to pair it with a different asset, and you can earn rewards. The rewards you earn come from what the strategists do in the order book with your tokens that you've deposited, and you get a kickback from the money that they make trading with your assets. Rubicon also has OP rewards that they are distributing to any people who pool their assets on the platform. And finally, you can become a strategist. This is very involved and advanced, and I won't be covering that in this video, but just know that you can become a strategist if you'd like. So let's look at this diagram, which is also excellent and from the Rubicon docs, and break down how you would go about becoming a liquidity provider and what that's going to look like. And then after you've provided your tokens, how they're used in order to market make the exchange. Okay, so you're a liquidity provider over here, and you show up with Ethereum. You deposit your Ethereum into the Rubicon protocol just by simply clicking a couple of buttons. You'll then receive a token called BathEth. Each token on the Rubicon platform has a Bath version of itself, such as BathDai or BathEth. So it's important to note that these Bath tokens are not one-to-one with the non-Bath token. So 1 BathEth does not always equal 1 ETH. So now that I have these BathEth, I have basically a share of the total pool. And at any time, I can come back to the pool and I can trade these BathEth for ETH. And depending on how long I've left my ETH in the pool, I will also be able to receive some fees that have been collected from the exchange because they were using my Ethereum. That's basically my reward for being a liquidity provider. So I've put my ETH in here, I have my BathEth, and I'm just sitting around. Let's say a couple months go by, and all the meantime, there are strategists who have written code and are utilizing my ETH. So they basically withdraw my ETH from the pool, and they deposit it into these markets. So in this example, it's an Ethereum DAI market. Now, these markets are basically executing people's trades. So someone comes up to the exchange and they want to trade Ethereum for DAI, and they use my Ethereum and someone else's DAI in order to make those trades happen. There's fees that go into that and also other rewards. So these fees are taken from the trades and deposited back into the pool. So now there's actually more Ethereum in the pool than there was when before the trade happened, because we took a little bit of the person's Ethereum who was trading. So I come back a few months later and I exchange my BathEth for ETH. And as long as the strategists were profitable during that period, I am going to receive more ETH than I put in for my Bath tokens. So that's basically how the Rubicon protocol works at a fundamental level as a liquidity provider, a strategist, and how the exchange happens. So let's focus a little bit more on liquidity providers. So they have the option to deposit DAI, USDC, wrapped Ethereum, OP token, etc. And you can add your own pairs if you would like, but we're not going to cover that because it's a little bit more advanced, but in a future video we may cover that. Strategists then use the tokens that liquidity providers have provided to market make. Yield from those strategists' market making is then returned to the pool, and when you withdraw, you are entitled to a share of those profits. One thing to keep in mind is there's a 0.03% fee when withdrawing from a pool, and this is just to penalize pool hoppers, which is basically someone who is just depositing into a pool and withdrawing very quickly soon thereafter and jumping over to another pool. So do keep that in mind. If you're going to be depositing, you want to make sure you leave your funds in for enough time to make up for this 0.03% withdrawal fee. That's not going to be very long, especially with the OP rewards that are being distributed to liquidity providers, but just something to keep in mind. Now let's focus a little bit more on BathTokens. So BathTokens are the tokens you receive from the Rubicon protocol after you've deposited your tokens into it. They track your share of the pool, and they're not always necessarily the same price as the actual token. So one OP does not always equal one Bath OP. When you go to get your tokens back from the protocol, you exchange your Bath tokens and you get back your original tokens. These original tokens you're usually going to receive more of your original tokens than you deposited. And that just all depends on how the strategists have been using your tokens and how much yield they've generated. Next, let's focus on the exchange side of things. So users trade between different assets. So they bring wrapped Ethereum and they want some USDC for that. So they sell their wrapped Ethereum and they receive USDC. They can place limit orders to buy or sell. And there's a 0.2% fee on taker trades. A taker trade is just a trade that executes immediately and you weren't benefiting the exchange by being a market maker at any point. So market orders are going to be taker orders, and those are going to be charged 0.2% fees. Fees can be dynamically changed by the protocol. There are parameters in the smart contracts that can be changed. So it's not always going to be 0.02%, but it'll probably be somewhere around there for the foreseeable future. Currently, there's no maker fees, which is amazing because most exchanges, any centralized exchange, will have maker fees. They'll be less than the taker fees, but they're still there. So this is amazing on Rubicon. You can provide liquidity. So if you place limit orders that are above or below the current market price and those get executed, you are benefiting the platform by being a liquidity provider. And so you are able to make your trades without any fees. Just paying the gas, but no platform fees. Finally, strategists, like I said, more advanced strategy. We're not going to really focus on it too much, but they basically take users' tokens from the pools and they market make. They receive rewards for determining the best bids or asks for different trades on the platform, and they're rewarded for successful fills. All right, so I think at this point you should have a pretty good understanding of how Rubicon works, the different roles in the system, and how you can use it to benefit yourself. So let's go ahead and bridge to the Optimism network just so you have your funds there and you're ready to go when you watch the second part of this video, which will take you through how to do all the various things on the Rubicon platform. So there's a couple ways to do it. Rubicon actually has a built-in bridge, which is amazing. So we're going to be using that, but there are some other options that I just want to cover real quickly, just in case you want to use one of those. So Optimism has their native bridge. You can just go to Optimism's bridge website and bridge from Ethereum mainnet onto Optimism. So this is great if you have all your tokens on Ethereum. There's Stargate, which is a great bridging service. So you can go to Stargate to bridge from there. Synapse, very similar to Stargate, lets you hop between any different chain onto any other chain. So that's great. And then there's also some centralized exchanges that support withdrawing directly to Optimism. So for example, Coinbase allows you to withdraw OP tokens directly to Optimism. However, they don't let you do Ethereum withdrawals to Optimism. So keep that in mind because you will need Ethereum on Optimism to make trades. So if you withdraw OP from Coinbase onto Optimism, but you don't have any Ethereum, it's going to be stuck there until you get some Ethereum because you need that to pay for gas. And then FTX, Binance, you'll have to check whatever exchange you use and just see if they allow withdrawing to Optimism. Rubicon also lets you purchase crypto directly from the app using Bridge, which is also another way to get your funds directly onto Optimism. All right, so that being said, if you've chosen your bridge, go ahead and hop over there and bridge to Optimism. If you're going to do Rubicon, then stick around and we will do a walkthrough of how to bridge using the Rubicon bridge. Okay, so first thing we have to do is add the Optimism network to MetaMask. So it's very easy to do. You can come to chain.link/network equals Optimism. I'll put this link in the description as well, so it's easy for you to find. Once you're here, all you have to do is click connect, which will pop open your MetaMask. So I already have MetaMask. I already have Optimism on my MetaMask, so it's asking me to switch. But for you, it will ask you to add this network. So I'm just going to click switch. For you, you'll click add, and it will fill in all these details here automatically. So you should see yourself connected to the Optimism network after clicking connect and clicking accept. Okay, so once you've added the Optimistic mainnet to MetaMask, you can come on over to Rubicon Finance and you'll be greeted with this pop-up. You can just click MetaMask or whichever other wallet you're using in order to connect, and you'll connect your MetaMask. So once you're connected to the Rubicon protocol, the next thing we want to do is get assets onto Optimism so we can use them in Rubicon. So we can come over here and click bridge. That will pop up the bridging modal. Then all we have to do is select the chain that we want to bridge from. So they support a ton of different chains. I'm going to be bridging from Arbitrum. So I'm going to select Arbitrum and then make sure to leave this as Optimism because that's the chain we want to bridge into. You'll then be greeted by this input box right here. This is how much you want to send over. So I'm just going to do 0.001. And I'm sending Ethereum on the Arbitrum side, and I want to receive Ethereum on the Optimism side. So this is important because if it's your first time bridging into Optimism, you need Ethereum to pay for gas. So make sure you're bridging in Ethereum if this is your first bridge into Optimism. Okay, as soon as I've selected how much I want to bridge, it's then giving me two options. So it looks like right now Hop is $2.38 as a fee to bridge, and across is 82 cents. So whatever bridge or whatever network you're coming from, you'll have different options. It will usually suggest the cheapest option as the first one. So make sure to just choose the option you want to use. And as soon as you've done that, you can then click switch to Arbitrum or Polygon or whatever network you're bridging from. This will pop up your MetaMask. You can just click switch network, and now you're on the network that you want to transfer your assets from. As soon as you're on that network, this button will now say bridge. You can click bridge, and that will pull up MetaMask again, where you'll have to sign a final transaction. This transaction is just confirming that you want to send your assets from the transfer from chain to Optimism. So just go ahead and click confirm on that and then wait for the bridging process to complete. As soon as the bridging process has completed, you'll see a little pop-up that says bridging completed and you're ready to go. So your assets might not be immediately available. It can take upwards of 15-20 minutes for your assets to arrive on Optimism. So don't worry if you don't see your assets immediately. Great, so at this point you should have some assets on Optimistic Ethereum and you should be ready to use Rubicon. So make sure to keep your eye out for the second part of this video where we will be getting hands-on experience with all the features Rubicon has to offer. We're going to be going over how to swap, how to trade, and how to become a liquidity provider. So make sure to keep an eye out for that video coming soon and subscribe so you don't miss it. Thanks very much for watching, and I'll see you in the next one.